Hey everybody, Tim Knight here. Welcome to a new week, a full week, and probably one of the biggest weeks of the year. It's going to be exciting. We've got earnings galore. We've got the Fed on Wednesday. We've got the unemployment report on Friday, and all kinds of other big economic reports coming out. I think something like 1,000 earnings reports this week. So there's going to be no boredom. Still feeling good about the week ahead, and I've got some charts loaded for you. We begin with the spider. I like the shape of this chart. That pink zone denotes a small topping pattern. The past 3 trading days have been lingering under that zone. And in fact, I guess back on Wednesday is when we took the big plunge below it. So in a way, kind of 4 days we've been hanging out here in this area. But it's just a really good setup. We're below that midline, and that gap, this green dashed line here, that gap is beckoning, I think, for a trip down there. Wednesday's going to be nuts, I think, because you know how on an intraday basis it's actually kind of boring when they actually come up with the news, but it's the press conference where things go zany and you never know what to expect. It's kind of a drag to deal with. I'm always very relieved when those Wednesdays are done because the dust kind of clears. Kind of 2 hours between the announcement and the close of market is just a bunch of craziness and false moves. Kind of a drag, but we'll see the other side of it. The VIX is down in the teens. As I've made mention, my principal concern, are we going to ever beat lower high, lower high, lower high that keeps going on? Because as you can see, with each instance of a rally in volatility, not only does it get beaten down, but it doesn't even manage to get as high as the last time. That's the very definition of lower high. So just ever since back at the beginning of 2022, it's just one after the other, weaker and weaker and weaker. And this last instance was last Thursday. We didn't even get to 20. We've been in the teens the whole time, although I'll happily take 19.36 over, say, 11, which is where we were a couple of weeks back. But even at this great distance, you can see how volatility is really getting suppressed. All trends change. I'm sure that one will too. Sooner rather than later, I hope. NVIDIA, always important. Trying to scare us here, but hasn't succeeded yet. This is the 3rd trading day in a row where it has kindly and obediently stayed under that critical line. It's kind of the same thing as what happened with the spider. Last Wednesday, we went jumping below into a new important zone, which is this bar right here. And since then, Thursday, Friday, today, we've stayed underneath it, that being this dashed line right here. And as I've mentioned, the ideal for me, I think, would be a trip down to 96.01, that gap, or something like that. I think getting back in the double digits would be a real psychological shakeup for a lot of folks. It matches nicely with that gap. It matches nicely with that long-term ascending trend line. So I love this setup too, and not surprisingly, it looks a lot like the spider setup because NVIDIA has such an outsized influence over the market in general. Perhaps you saw, because I've been saying on here, AI is overhyped and it's going to be an enormous AI winter coming, et cetera, et cetera. And finally, we're starting to see reports. Just go to Google and type OpenAI space bankrupt, enter. And they're not bankrupt, but you're going to see a lot of articles that just came out about if they don't raise billions and billions more, they ain't going to be around in a year because they're just bleeding money left, right, and sideways. And I've talked about it before. You hire a bunch of 20-year-olds at $1 million a year and don't really have much in the way of revenue, it ain't going to last. And I would also add that before it was like, AI is going to take over everybody's job and it's going to replace all these professional applications and on and on and on. What's the best they've been able to come up with now? What was the big news a couple of days ago? Well, we'll be coming out with a search engine before long. That's it, a search engine, which I think Google's kind of mastered, but they'll trot out Search GPT. I'm looking forward to trying it. At best, maybe it'll be marginally better than what we have now, and more likely it'll be like go right back to Google. So interesting that this big revolution seems to be sputtering into like, well, we'll be a little bit better than what you've been using the past 20 years. So we'll see. SMH is also down a little bit, and it too has an important, although not nearly as clean, resistance level, right? Like so. So it's really all about NVIDIA and that demarcation that I illustrated. And in turn, cubes have their own, not great, but we'll use it for now, horizontal line in terms of resistance as well. There was a lot of strength earlier today. The market just shot up a lot of sort of on sale stocks, and they vary. I wouldn't go anywhere near AMD for a bearish trade because it's been so battered, whereas something like, well, ARM, it's doing great on the downside. We'll get back to that a little bit later. Taking a look at BTC, Bitcoin. A couple of thoughts on this. Some of you probably heard, I trust, that there was a big Bitcoin conference over the weekend, anticipated for months. There were some major celebrities, political celebrities, if you want to call it that, speaking, including a former president. And they were welcomed with open arms because, they want to pander to the audience, so they're going to say the right thing. It's like, we're going to fire Gary Gensler, we're going to buy up billions of dollars of Bitcoin. We're going to have a strategic Bitcoin reserve for the United States of America, et cetera. The anticipation of the conference and the words uttered caused a lot of rally there, a lot of strength, because we bottomed on this down around 53,000 just earlier this month. Yeah, 53,000, and we got up to 70,000 today. We've had about a $3,000 reversal today. And I would also point out this is just another lower high. So here's the lifetime high, lower high, kind of a match here of this one. So this is kind of a lower high, both of them, and then yet another lower high here. We have not broken that trend. It really has to get above this dash line to really dispense with that. But I do find it sort of ironic, if not hypocritical, that an industry predicated upon libertarian, anti-government, nothing to do with the Federal Reserve, this is the whole new order here, would go hat in hand and hope that the United States government would basically bankroll billions and billions of dollars to purchase their asset to elevate the price. Wasn't what you said earlier, was it? But they're basically after a bailout, if you want to call it that, or at the very least, sort of artificial demand. But I guess, U.S. money is as green as anybody else's, so they're happy to take it. Tesla, as predicted, is making a jump. We talked about this last week. Very, very clear. We approached the 2 and 3.15 gap in Fibonacci. It got as close as it could to that on, I guess that was Wednesday. Hung out there for a couple of days and shooting higher today. I believe a major investment bank made it their top auto recommendation. You and I talked about Tesla bottoming out here and rallying, and that's exactly what it's doing. And as long as we're making predictions, it ain't going to get past these fellas here. I suspect it's actually going to poop out at this gap, if not below 245.623. A chunk of the rally's already gone, in my estimation. And I really don't think that in the short term, like next couple of months, maybe even for the balance of the year, it's going to get past the kinds of highs we were looking at a few weeks ago. Just as an aside, LCID Lucid is, kind of hammered out a pretty good base here. It's not a bad little bullish base there. Could be kind of a speculative long position. There's been quite a washout in the EV space, and then Lucid's managed to survive so far. So there you go, long idea. This one just kind of made my eyes pop out because it jumped on the screen because it's like the biggest gainer in the market today. But when you've gone from literally like $3,000 a share to $1, a big percentage gain isn't that hard to conjure up. I'm showing this not because of this kind of one-day wonder that we're experiencing, but just to illustrate, just how far stocks can really fall from grace. This was an online university back in 2018. This was like the NVIDIA of its day. It was doing fantastic, hundreds and hundreds of percent, just printing money. Not anymore. Negative 99.9, a whole bunch of % down. So quite the sight. In contrast to this, Serve Robotics continues to thrive, SERV. I think they've gotten all this attention because of NVIDIA. There's that name again, NVIDIA making a big investment in the company. If you're wondering what they do, they make these cute little robots with eyes on them that scurry around the neighborhood and deliver, a burrito or, your cosmetics or God knows what. So not so sure what the prospects of them are in the long term, but they have been getting tons of attention lately thanks to NVIDIA. I'm getting a little, long term, I still love precious metals. I'm really judging them with a suspicious eye these days just because they seem so correlated to just all assets, equities in particular. I mean, here's gold, and it's got some risk here before we get down to that principal base, and then silver, SLV. It's just kind of rolled over here, And it seems to be finding some stability at that green line, but if we really start to get a washout in equities, it could easily get pounded down to this next lower level. I'm kind of standing aside for now because it just seems that they aren't really in a class of their own just yet. They seem to be dragged around by the nose by equities in general. This is IWM, the small caps, and I've got puts on this. I've got a nice bearish engulfing pattern on this one today, looking at the candlestick like so. And I would say that we have an opportunity for this to get as low as this gap down here, which also just happens to correlate really nicely with that trend line. So somewhere around that zone. It seems ambitious, I know, but it could happen.